Morning, market chameleons and Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Good. It's 9 o'clock. Let's get started with the disclaimer.
Good morning, everyone. Thanks for joining us. Before we get started, keep in mind, Will and I, Market Chameleon, we're not broker dealers. We're not registered investment advisors. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's a disclaimer.
Excellent. I hear we may be seeing some new features this morning.
Yeah, so that's what I'm going to do today. Go over some of the new features. We'll start out with the pre-market report just to see what's going on there. Then I think we'll talk a little bit about some of the new features and maybe take a look at the SPY. And I know that the bond market, the treasuries have been in the news. People have been talking about them. So I wanted to kind of touch on that and discuss what's important and what it could be potentially signaling, why we're looking at it and what are the signals that it could be sending to the markets. Of course, a very important benchmark to keep an eye out. So we'll save that towards the end to discuss that a little bit, but let's get started really quickly. I'm going to try to go through the pre-markets fairly quickly. Unless you have questions that come up, then I'll stop and go over any questions that you have, Will. But just to cover more of some of the new features and talk about SPY, I'm not going to spend too much time on the pre-market. So this is the pre-market report. We have stocks trading in a pre-market. This is the most active, biggest percentage gainers, biggest percentage decliners. I'm going to filter out, see what's going on in the higher market cap stocks. We got 20 billion market cap or higher. I got 32 on the percentage gainers list, 48 on percentage decliners list. So from that perspective, a little bit, I would say more leaning towards the bearish side at the open than the bullish side. We have a couple that are up in the morning. It's EZS, Airbnb. They look like they're all reacting to earnings. Twitter's up 3.2%. That's been kind of on a run after they've announced, like they think that they're going to change their model a little bit and
we talked about Snap, I think earlier in the week, maybe. Twitter came out this week and also said that they see their revenue growth, improving substantially based on, new models that you're talking about.
Part of the model is they might go towards offering subscription-based feeds, right? If they have people, so they're exploring, which is interesting because in the very beginning, a lot of them were promising always to have it always free, and now they're looking at it and potentially, if they do it, who knows, and they're successful, then is LinkedIn all free too, or do they have a subscription base? I think
no, they have a subscription base too.
They have a subscription base, and I think they're doing pretty well. Microsoft, right? Who owns LinkedIn? Microsoft.
Correct.
At this time, another interest, not to stay on this topic too long, but if you ever listen to people who used to work at Facebook, did you notice all of them say they do not use that application because it's like addictive and tries to reprogram your mind? Is all these negative things. People who were part of creating the product say in interviews all the time, I do not use it. I don't let my kids use it. I don't let anybody in my family use the feeds. So
it's interesting. I mean, the whole social media. I mean, my brother's been an advocate of the whole social media platform positioning for years now, and he was on TikTok 2 years ago, and I don't know, because my daughter uses it, whatever. It's been on my phone, so I've started playing around with it. It's incredible. If you spend 15 minutes on it, it's incredible how addictive it is, and how many interesting things. I mean, I just thought it was just people dancing and music playing, but their life hacks, finance, real estate, all these interesting short tidbits that appear, and It's amazing how it,
Right. But the way that these platforms operate is to psychologically, right? That they're designed in a way to make you keep coming back, and giving you this like reinforcement and also to influence your behavior, which is scary, right? And
Yeah, actually, it's funny you say that. Munger, we were talking about Munger yesterday, Buffett's partner, and he was someone was talking to him yesterday in a public forum, and he was just ripping into Robinhood for those very processes that you mentioned. Like, he finds it super dangerous, which I'm not necessarily in agreement with. Let's be clear, but Munger was saying Robinhood, a lot of that pieces to that app is creating people to do things that they maybe shouldn't doing with their investable dollars. So
right. And and I think like that, that conversation is starting to heat up, especially when you have former employees of some of these firms starting to give warnings and say, hey, I don't use these, So I don't want to digress too much because, we could talk about that probably forever, but let's take a look at the unfiltered list really quickly so we could get to some of the new features. And here the unfiltered list, see LIXT up 100% pre-market, lower cap stock, 42 million, but trading 13.9 million shares in the pre-market, pretty heavy volume there. AFI up 30%, trading 1.5 million shares. It's an $88.7 million stock. Looks like there's some news in the pre-market, maybe a takeover. That's what it kind of looks like to me. So if there are no questions on...
Funny, just looking at that list, RKT, the next one down. I don't know. When we had Felix on, I guess maybe 2 weeks ago, 3 weeks ago, that was one he had brought up as some strange, unusual call volume.
In Rocket, right. So it looks to me like they reported earnings last night. So over here, it's, Rocket experienced explosive growth, revenue increased 144%. Obviously, it's reacting to earnings. Closed at $19.90 yesterday. Pre-market trading $23.86. That's up 19.9%. I'm going to just take a look really quickly. And it doesn't look like, this is a relatively new stock because I
think it may be the second or third earnings.
Yeah, so not a long history of earnings right now. It's if we had time, I'd take a little bit deeper look into it. And if you don't have questions, we could come back to.
Yeah, no, let's get to the new features.
So on new features, one of the things that we did change was we're trying to tighten up some of the bullish and bearish opportunities here. And I know because I've been getting, emails and requests for especially the bearish opportunities, because I think we didn't, we were just looking at it from perspective of theoretical edge, and now we added some technical analysis behind it as well. So if it's in the technical uptrend or downtrend. So over here on the bullish opportunities, you'll see it that, DE popped up because there is for example, it's a strategy that has a theoretical edge, like this one, a call has theoretical edge. It's $7.80. We think it's worth $14.71. That's an 88% theoretical edge, 53% probability of success. But on top of that, in the filter, and these are coming from our screeners, it's looking at technically. So we could see here the stock's in an uptrend. If you open this up, you can kind of see, it's been outperforming 2 week, 3 week, 1 year. It's entering a seasonal bullish trend. So we're giving that extra layer of filter in the bullish opportunities, and we're doing that now in the bearish opportunities. So I'm going to come here, and this is a little bit, I just noticed it's a little bit slow on the bearish opportunity side. So I'll take a look why that's happening and try to fix it. But for example, here we see Apple popped up, bear call spread. So 2 opportunities. It's looking at a call spread selling the 129 call March 19th, buying the 132.5 call March 19th expiration for 66 cents. That we think it's worth 44 cents. So if you're selling it above, you're making, then it's kind of like you're making extra. So that's a theoretical edge of 7.9%, 85% probability of success. So if we open that up, see why it potentially filtered out. And what we see is right now, Apple is in a technically, see, that's why fast bearish crossover. So technically, Apple is in a bearish kind of trend if we're comparing it to the moving average. It has the other indicators are a little bit mixed. So we see in the 2-week and 3-month. So in the short term, intermediate term, it's been underperforming the SPY. 1 year it overperformed. It is entering a seasonal bullish trend, but you want to kind of go into Apple and see what else might be besides this, just analyze it a little bit further. For example, we know Warren Buffett, who owned a big stake in Apple, looks like he took some of it off, right? I don't think all of it, but he did ease up a little bit. So what he might be looking at, and I'm going to just take a look really quickly at the fair value of Apple. And listen, I love nothing against this company. I love the company. I have lots of their products and I'll continue buying their products. I'm just looking at it from a perspective of,
I hate the company, truth be
yeah.
told.
Huh?
I hate the company. They have such control. Oh, I've had a problem with, it's
Yeah.
it's a love-hate relationship for me.
Yeah. Just looking at it from a perspective of, stock price. So we see here, closed at $120.99. If we use historical multiples, like three-year average, it's 3-year average PE, 3-year average price to sales ratio. So basically we're looking at what is the market cap of Apple divided by its earnings. How much does it earn? Or if we take the market cap of Apple and divide it by its total sales, everything it sold, we take a look at the 3-year averages, and then we get these implied values. If we did the same thing and compared Apple's price to earnings and price to sales versus SPY, S&P 500, right now, Apple's PE ratio is 32.6 versus SPY 36. So it's trading at a 9% discount, historically traded at 13% discount. So if it goes to its historical multiples, that's the implied value. We do the same thing, price to sales. Right now it's at 155% premium to SPY, historically traded at 103% premium. So that's the implied value. So we see if we take the average of all these, we're at 93.89. So here, look, right now we're above that historical benchmark, 28.9%. That's where you have to decide, is that justified or not? Of course, if Apple is going to introduce new products, or, if they say something, which they may very well say, like, hey, we're getting into, got these contracts with car manufacturers or whatever it is, then maybe it's okay to price in a premium from historical. So far I haven't seen that yet. So then you're faced with, well, from a historical perspective, we're at a 28.9% premium. It's in the stock's a little bit in a downtrend. Warren Buffett got out. You got a 32.6% PE in Apple. Its earnings are growing, but what this is telling me is if the earnings don't grow, if we just stay right here flat, it'll take 32.6 years for those earnings to equal the current stock price. So that's really quickly, again, one thing we change. I'm going to come back to the homepage. Bullish opportunities, bearish opportunities. We tightened it up a little bit. Now there's a filter in there looking for a technical, downtrend or uptrend or crossover, fast bullish crossover, bearish crossover as another layer in this opportunity, besides looking for theoretical edge. Okay. If you don't have any questions there, I'm going to move on to the next feature and get to the
We did have a Mike actually from Tyler, Texas, had a question. He says, can you describe the technical indicators waiting for each added to the card and how each is ranked since not all are shown?
So there are two pieces right now. Two of the most critical pieces is the technical indicators really using the stock price and the moving averages as where's the price of the stock moving relative to its moving averages. So the one is just uptrend or downtrend. Uptrend is where we look at the stock price, 20-day moving average, 50-day moving average, 200-day moving average. If they're all crossed in a bullish manner, then the stock is considered in an uptrend. Basically, all of them are crossed each other to the upside. Downtrend would be the opposite. All of them are crossed to the downside. Then you would have a downtrend, a bearish downtrend. A bearish crossover, it only looks at the stock price in 20-day crossing the 50-day, but not necessarily the 50-day crossing the 200. The thesis behind that is it might be starting to end into a downtrend, and it might be an early indicator, because if you wait for a complete downtrend, it takes time for those moving averages to cross each other. So that's how the bearish crossover and bullish crossover works. So if you take a look, I'm going to go to Apple real quick and just take a look at the chart. So let's take a look at the 1-year chart. So I'm going to take the 20-day, 50-day, 200-day, right? And let me close up on a 3-month. So you could see here is just using the stock price and saying, look, the stock price here right now, where you could see here, it crossed below the 20-day, below the 50-day moving average, and that 20-day is getting now pulled lower below the 50-day, which is kind of an indicator like what's going on. Why is it getting pulled down? So that's kind of like one indicator as a bearish crossover, fast bearish crossover. So you see how the stock price just whoosh, went right through both moving averages, and it's pulling down that 20-day to the 50-day. Is that?
Yeah, that's helpful.
Helpful. All right. Again, you want to take a look. That's the first indicator. You still want to go do your due diligence, make sure any events coming up that could change that. You can go in and do that, because it's impossible to put in every factor in, but that's one of the factors that's inside that filter. News. So one thing we added was a historical news lookup. Now, what this is that when companies have any type of material information that's material to its stock price, they'll usually use a press release or one of the major press release agencies to communicate that news, earnings or stock announcements, litigations. They'll use a press release so everybody kind of, they meet their obligation releasing that news to everybody simultaneously at the same time, so nobody should be able to get it first and then everybody else hears about it. Now, with the press releases is, you got some major press release agencies, and of course, if you're looking for something specific, you can go to the press release agency and start looking up, Business Wire, Access Wire, and trying to find that information, but they don't always use the same one. And what we do is consolidate them here, because we just, we lease this information from them, so we license it, so we just consolidate it internally. And maybe you're looking for something specific. So I'll give you an example. Like, let's say in Tesla, I want to create let's say I want to create a spreadsheet of something important that I think, and I need to see a trend. So maybe I'd say, like, let's say vehicle production. Like, what do they release every so often? Vehicle production. I'm trying to do it from memory.
I think that is monthly.
Right. So let's say we search it. So here's in the last year. You could open it up, kind of read about it, see what they're doing, create your own spreadsheet if you want to do like to see what is the rate of growth, from month to month, years, the rate of growth increasing, decreasing. You could do your analysis, but you need to get to the data. This is a quick way to filter that data out. If you want to go back to like 5 years of data, you could just do it here, do a search, go back 5 years of data so you could see it this way. Maybe you want to say, hey, you know what? Didn't Tesla do a public offering of stock? Or, ooh, hold on a second. Just did something. Let's say you wanted to see a public offering, right? So if I do this, do search. So this is in the last 5 years, all the news. Now this shareholder alert, class action, if you just want that, take that out of there because there's a lot of them and you don't want to, read it, just search, and that will take out all the class action. So here's like Tesla public offering. So we have one in here. I'm going to sort it by 2020. So what happened there? Okay, Tesla had a public offering. They announced it February 13th. They raised 2 billion shares. What else important information I could get? Oh, okay, here. Elon Musk, he'll participate by purchasing up to 10 million common stock in this offering. Larry Ellison, member of Tesla's board, also purchasing 1 million. That's good information, right? Not only are they raising money, but they're also showing confidence in the future growth because they're not just, hey, this is too high. They're actually on the buying side personally in this public offering. So how many times they did that in the past? Here they issued convertible bonds. So not only common stock, convertible bonds. You could go through that, read it, and a lot of times you learn from it where something you learn, you could apply to other situations, right? Like, hey, is what if Facebook does it or whatever. What are their terms? What are they saying? So remember, you could see here Global Newswire, MarketWire. We just consolidate these press release agencies so you could kind of look in there. And this is our first version. So we're going to be enhancing this, but we wanted to make our first version simple to put out there. And it's very hard to get, except at least when I looked at it, because Google, you can't really Google it this way and just filter press releases because press release agencies, I don't think allow Google to do it. So it's very hard to search using like keywords, press releases, and symbols.
And just an FYI, chameleons, like all new releases, there could be bugs. So really, use this feature and let us know if you're having any issues or finding any things that you don't think are potentially right. It's always very helpful.
And you could do like here, let's say Amgen, biotech stock. Maybe you're looking for, here, I'm going to do it in the last year. You're looking for important dates. Why am I doing it? I'm clicking around too fast, but let's say you want to do a PDFA date, right? So you could do search that. And here's like, you could say, here, look, scan it through, and it should be highlighted in there somewhere. So I'm just going to, here, May 29th, there's a date here. Here's a study. That's something to keep in mind. PDFA November 15, 2020. So here, I looked at it for last year. I got to change this to be the most recent, but if you open it up, August 16 to 2021, there'll be a PDFA date. So that's important as well because of any upcoming events, especially in the smaller biotech stocks. Maybe you're looking at, hey, is Amgen working on anything with skin cancer? Skin cancer, search this way. So let me see. I just broke the tool. Cancer. So you could kind of look up, by keywords. And it's again, it doesn't need to be only financial. You could look up any type of, you could look up Roku subscriptions or you could look up Tesla, solar, what are they doing with solar? If that's what interests you. So this way you could see anywhere that solar was mentioned in the press releases. So hopefully, once you get used to it, it's a really quick way to zone in on something specific. If there are no questions, I got a little bit time left, so I'm going to go to the 10-year bond.
Yeah, just an FYI, hands are clapping for this feature, D. Mike H said good stuff. He was not aware of this feature.
Awesome. Thank you. Yeah. So, yeah, like I said, this is our first version. We're going to see, so far, if there are no bugs, no issues, we'll start enhancing it going forward. But this is our first version coming out. Let's look at the 10-year bond. So I went into Yahoo Finance. This is the 10-year yield, right? So today it's easing off a little bit. But take a look here. Here's year to date. And this is what the yield on a 10-year treasury. And it's going up. You could see here from January 1st going up and up and up. And even if we take a 1 year, we're like up right over a year period. 1.46, that's the highest it's been. If we go back to 5 years, we're not that high, but we could see we're coming off the low 1.46. Its high is 3.1, and it's starting to tick up. If it gets back here, what can we read out of this? Now, of course, those 10-year bonds are supposed to be floating based on market. The Fed isn't controlling it. Those are market forces moving it up or down. And
they do say the bonds lead the market.
The bonds lead the market because the bonds are a little bit less noisy. It's a much bigger market. You don't have these situations where it's like, oh, here's a low float stock. It's just shooting up beyond. It's a very big marketplace. It's not as noisy. It doesn't have small speculators that could move it around or push it, so it does, right. It's something closely watched. It leads the market. Now, for obvious reasons, if interest rates are going up, that's going to impact mortgages. If it costs you more to get a mortgage, more to finance a car, that's not good for the economy as a whole because it's a bigger cost, borrowing money for capital, for expanding your business, that goes up. So those are obvious reasons. But another thing that it could be indicating to us, and this is important, is we saw the bond market, the yields declining for a very long time. And it's a little bit counterintuitive because you're like, well, if we're printing money and there's inflation, those yields should be compensating, because if you're putting your money away for 10 years, you want to maintain your purchasing power. And the reason that's been going on is because there's another force in place countering the printing of money, and that's productivity. So if productivity is increasing, if there's innovation in the marketplace on a 10-year horizon where people feel like we're going to become more efficient, costs of goods and services will be more efficient, transportation, energy becomes more efficient, and it's countering the effect of printing money, those yields will still remain low because, yeah, maybe the cost of a house goes down, but if the cost of a computer and a car and all these other things come down for me, in aggregate, I'm doing better 10 years from now than I am today, so I'll put my money away for 10 years. When that yield is starting to move like this, right, and we got to keep an eye on, and it breaks out, the market could be signaling an issue where, hey, we're not seeing this productivity right now that we're expecting, or our expectations are changing, which could create an inflation is not good for the economy or the stocks, really, if you just have runaway inflation, right? So that's one thing. Another thing to look at is the spread. So if I'm earning a 1.46% yield on a treasury, and then I'm going to come here to SPY, and everybody says, well, the market is overvalued. The market is overvalued. The valuations are high, but, well, how high are they, right? Like, what are we thinking? When you're saying high, is it 5%? Is it 10%? Is it 50%? Because it makes a big difference, right? If we're like 3% overvalued, it's not that of a big deal, but how much overvalued are we potentially? So we need to use our benchmarks to kind of get a sense of where we're at. So here I'm going to take a look here at these ETF ratios, SPY. So this is using the S&P 500 holdings as our benchmark. And we're going to take a look at, the historical multiples. So I'm just going to kind of jump to these and say really quickly, got a minute left. I think we're over a minute. Let me just finish this really quickly. But if we use the 3-year average historical multiples, we see right now our PE ratio is 36.1, 3-year average 24.75. That's 46% above our 3-year benchmark. Price to sales ratio, we're 20% above. Price to book ratio, we're 16% above. Price to operating income, we're 36% above. If we took the average, we're potentially 30% above, our benchmark right now. So what gives, if treasuries are going, if the treasury yield is telling us something, and look, our market cap expanded, right? But their total revenue, now there's some stocks that did great in the S&P 500, but others did not. Our total revenue declined. Net income declined. Operating revenue declined. Operating income declined. Gross profits down. Market cap up. What get right? That we need to be, we're pricing in a very optimistic growth rate. What, maybe it's the stimulus people are optimistic about, maybe the vaccine, we're going to get back full throttle. Just something to keep an eye out. How far are we right now above those benchmarks? Is it justified? This treasury yield, look, right now, if we took all the earnings in the last 12 months, trailing 12 months, and use that as our prediction for the next 12 months, right? Those earnings divided by what we're paying for a market cap, that's a 2.8% yield. Okay, so if you bought all the stocks in all the companies in the S&P 500 and kept all the earnings, that's 2.8% return on your investment in 1 year. If we use the same trailing 12 earnings versus the treasury right now closing in at 1.5%. So that spread, the more it narrows, the more those stocks prices are overvalued.
Awesome job, Dima. Awesome job. I let you go a little long because everyone was super interested in what you were saying. Thanks so much.
All right. Thanks, everyone, for joining us. Have a great weekend. Stay safe out there. Have a good trading day.